got Microsoft earnings. Microsoft being that bellwether of the tech giants is the first one to come out. Big tech needs some help at the moment because as far as we can tell, there's only bad news coming out of tech at the moment. They're suffering lots of antitrust problems as usual, and they're laying off a lot of companies, laying off a lot of employees, which suggests that these companies have grown too fat too quickly, and they need to start losing some of those costs. And unfortunately this seems to be in people rather than massage parlors and pool tables and things like that. They'd rather just get rid of all the people. I've actually got a little piece on that towards the end to think how that might go and how that might be beneficial for their share price. But Microsoft's earnings came in at 232 per share versus 229 per share, so beat on earnings, and 52.75 billion given, and it was expected 52.94, so it missed very slightly on revenue. I think you're going to see that as a trend. Personally, I think that's going to be a trend. You're going to see earnings beats probably all the way throughout the year, throughout the year, but revenue slightly falling down as ad spend comes in lower, because they're going to make all these cuts. It's going to make the earnings look good and show investors why we invest in them and why it's possible that this share price is still going to go up, even though the economic market doesn't look so brilliant. I think that's going to be a big point going forward, and that would be my bull case for the big tech stocks, and Microsoft's the leader here. However, I personally think there's bad I think I showed this on the Discord. I think there's bad news in here from a growth point of view. Obviously, Azure still making 31% margin right now, which is brilliant. But that is, if you look at this graph on CNBC, and maybe we'll pop it up in here when I show it to Stephen that later. But it goes from 50% growth in fiscal year 21, quarter three fiscal year 21, and it's now sitting at 31% growth. So that has gradually decreased over the course of the year. But every single other section of Microsoft right now, Dynamics and Cloud, Office 365, computers, OEM products, Xbox, has all decreased in margin, with Xbox at the bottom there going from 3% margin, minus 3% margin to minus 12% margin right now. So every single section of growth is slowing. Basically, it's not. It is still growing. Obviously, 31% is nothing to to be shy about, but it is slowing, and that must put a few people's discounted cash flow models into a bit of a downward spiral there. On the call, we had, I think the main reason why Microsoft lost so much in the post-market, post their earnings, is because their outlook just didn't look very good at all. Poor guidance, I've got written down here, expecting growth to fall in Azure by another 5%. And in general, cloud and digital spend has all been pulled forward. It's another one of those that they're making this excuse that all of their revenue and their earnings have been pulled forward from 2020 and 2021, and this is what they're end up with here. So it's going to look bad over the year, but still, I believe that they're going to end up with, I think they're going to end up with good earnings here, but poor revenue. My question to you, though, to you guys, and I know you want to bring this out, how come Azure makes 31% margin and Tesla is still able to make 28% margin on their cars? I don't understand how this happens.
Well, Tesla's margin is slipping, which was the worrying thing. Tesla's earnings were interesting to me because they were a total miss on revenue and a gain on a beat on regulatory credits. So it's now a regulatory credit company, not a car company. But Microsoft for me was an interesting earnings because I think they're a victim of growth pulled forward, which is something we were talking about probably this time last year, that we thought some companies were going to be suffering from growth pulled forward, especially from working from home. They're got a big boon out of that, and now that's not going so well. Azure, the section on that was quite interesting. That they said that they'd seen a lot of tech spend in cloud. They'd seen that in the 6 months, but in December it was a lot more sort of measured. There was definitely people trying to sort of moderate their spend in the cloud, which is why Azure saw that little tail off in December. Still growing at a rapid pace, still a big part of Microsoft business, but it's definitely not growing as fast as it was. They actually took the impairment charge looking through their earnings. Now, they took the 1.2 billion charge for impairment for letting go of 10,000 employees in this as well. So to still be earnings after taking this impairment charge now is kind of pretty good. So I thought Tesla did fine. I thought Microsoft did fine. Sorry, I thought they were kind of sandbagging their guidance. I think they're trying to sort of like show you that we're going to do a lot worse than they actually are. I was quite impressed with the way Nadella is one of those people I'm perpetually impressed with as a CEO. He seems really sort of cool, calm and collected. He always seems to have a good grasp of the market. And what he's projecting is essentially Microsoft to have a steady year, possibly returning to growth next year, you would assume. Steve, did you listen to it?
I didn't. I was interested in Paul's idea, though, that it's going to be a general trend for missing revenue and beating earnings. I'm trying to put together a sort of biggish picture in my mind of what I'm expecting from big tech. And I think that's another interesting part of it. So what we've been seeing is quite a lot of layoffs, basically, as people try to get their costs under control, and their big cost is salaries and wages. And I would also say stock-based comp, but I'm not sure that's necessarily the reason they're letting people go. This fits together into a picture of growth pulled forward, doesn't it? So a year ago, they needed a load of people to service demand, and now there's not so much demand for their services, products, and so on, that they need fewer people. So you better get rid of those people rather than keep paying them all the time. I don't know in the case of either Microsoft or Google, Alphabet, whichever, exactly where these people are getting lost from, what parts of the business they're being let go out of.
Well, I can tell you that I can't tell you exactly where they're being lost from. I can tell you a bit about Google's, but I don't think that's really relevant for here. But I can tell you that they're losing 10,000. They did actually take on during 2021 40,000 people. So is this a drop in the ocean type thing? I mean, or is this just people on TikTok who are, have you made a video about how your day goes at Facebook or Google on TikTok? That was just an advert for you to get axed, and I reckon those people went first, right?
Just to let you know, last year there was a lady on there who, she was a product manager, and she tailored her CV. She said, "I'm tailoring my CV and sending it into Spotify, so it is exactly like the Spotify website and the app." So she tailored it, and she made this beautiful CV that looked like the website, even had like buttons that you could click on to go through it. And she got the job at Spotify, and she was so happy about it. She tweeted out all this stuff about how her CV and how she made it, and then she quote tweeted it yesterday and put, "I've been fired."
Yeah. Saw Spotify were letting people go as well.
Girl.
Poor girl.
Oh, poor girl. Oh, that's so.
It's funny when you're
well.
detached from it. I mean, if it happens to me, I'll be like, I think I'll have a lot more sympathy. But I feel really detached from these kind of, and I think I feel a little bit sort of like, once I found out that, is it Google were letting go of 21 people in the massage department or something like that? I sort of feel like we're so detached from.
True that's.
Yeah,
I don't know how true that is.
If that is true, I feel like we're so detached from reality here. Average salary at Google being 300,000 or something like that, it just seems like monstrous to me. If for 300,000 and you're getting massages, pay me £300,000, you can treat me like as bad as you want. But if I'm getting massages as well, this is a
promises.